Assalamualaikum and a very good day. My name is Siti Nurshahira binti Hamid and I will start the presentation of segmental reporting with the company background. IHH Healthcare Berhad is an international private healthcare service company which was founded in 1974 and headquartered in Kuala Lumpur, Malaysia. This Malaysia-Singapore private healthcare group is one of the world's largest healthcare networks as it has more than 65,000 employees and 83 hospitals in 10 countries including Malaysia, Singapore, Turkey, China, India and across Asia and Central and Eastern Europe. This company is specializing in the provision of primary health care, secondary and tertiary care, quaternary care, complementary ancillary services, and medical education services. IHH is owned by Khazanah Nasional, which is an investment arm of the Malaysian government by 44%, while its largest shareholder is Mitsui of Japan, and it is also listed in Bursa Malaysia and Singapore Exchange. IHH Healthcare Berhad is divided into 5 parts, which is Parkway Pantai, a hospital operator and healthcare services provider company in Asia, hospital operator Acibedem Holding, a healthcare services provider in Central and Eastern Europe, Middle East and North Africa, Acibedem Saglik Yatiri Milaris Investment Holding Company, Malaysian education services provider, and real estate investment trusts such as P-Life REIT. IHH Healthcare provides their patients with access to basic day-to-day healthcare service through outpatient treatment, routine checkups and vaccinations, including preventive care and patient education. Other than that, they also offer an education in health and medical science to train and develop nurses, doctors, allied healthcare professionals and other medical sectors.
Thank you to Nurshahira. My name is Dora Hafiza and I want to present about factors to consider. The first factor is the nature of the service provided. IHH Healthcare is providing a healthcare service as their major business, and besides that, the company also offers an education in health and medical sciences. Currently, IHH Healthcare has reportable segment, which is hospital and healthcare in Singapore, Malaysia, India, Greater China, Brunei, Turkey, and Europe. Furthermore, IHH Healthcare also provides education in Malaysia, Parkway Life REIT, which is real estate investment trust, and others including the corporate office. Next, class of customer for services provided. IHH Healthcare has provided a full spectrum of integrated healthcare services, including primary care, secondary and tertiary care, quaternary care, complementary ancillary services, and medical education. Last but not least, method used to distribute the services. The method used by IHH Healthcare to distribute their service to their customer may vary from their needs or the services they want. There are 3 types of services that IHH Healthcare offer to their customers, such as transparent care, advanced care, and seamless care. I will present about type of segment. Operating segment may be a business or geographical segment. For IHH Healthcare Berhad, in presenting information on the basis of geographical segment, in which segment revenue is based on the geographical location of operation. IHH Healthcare use both segments. For business, they provide healthcare service, primary to quaternary care, as well as complementary ancillary services. The next one is IMU Health, which provide education service. They offer a quality education in health and medical science. Therefore, their business also including P-Life REIT, which is real estate investment and management that include the corporate office. The other one is the geographical segment, which comprise in Singapore, Malaysia, India, Greater China, Brunei, and Central and Eastern Europe.
Thank you, Nora I'm Zarina Hani. I'm ready to present to you the Chief Operating Decision Making and its responsibility. Chief Operating Decision Making is not necessarily a person and is not relevant as a person responsible for making strategic decisions about the entity's segments. It is also likely to vary from company to company, such as Chief Executive Officer, Chief Operating Officer, and others. The responsibility of the Chief of Operating Decision Making is to allocate the resources and assess the performance of the operating segments. Thank you, Dara Hafiza, for the good presentation. So, hi, I'm Zarina Hani. I'm ready to present to you the Chief Operating Decision Making and its responsibility. Chief Operating Decision Making is not necessarily a person and is not relevant as a person responsible for making strategic decisions about the entity's segments. It is also likely to vary from company to company, such as Chief Executive Officer, Chief Operating Officer, and others. The responsibility of the Chief of Operating Decision Making is to allocate the resources and assess the performance of the operating segments. Mr. Chong Francis Now was appointed as Chief Executive Officer of IHH Healthcare Malaysia on 1st March 2020. He provides the strategic direction and maintains high standards of operational and clinical excellence of IHH Integrated Healthcare Business in Malaysia, which includes a network of 16 hospitals encompassing Clinical Hospital, Pantai Hospitals, and Prince Court Medical Center, as well as ancillary services such as Pantai Integrated Rehab and Pantai Premier Pathology, and a chain of primary care clinics under Twin Towers Medical Center. Mr. Anshak Pandi. Mr. Anshak Pandi was appointed as the Group Chief Strategy and Business Development Officer of IHH from 1st August 2021. He is responsible for group strategy, business development, mergers and acquisition, corporate structuring, investment and divestments. He also leads the transformation and integration of IHH laboratories. Next, Ms. Angela Ryan. Ms. Angela Ryan joined IHH Healthcare Berhad as Group Chief Human Resources Officer with 25 years of global HR experience and expertise in creating people-centered organizational, culture, and HR transformation. So here I provide to you with a general overview of the responsibilities typically associated with the role of Chief Operating Decision Making. First, the strategic decision making, which the Chief of Decision Making is responsible for making key strategic decisions that align with the organization's overall goals and objectives. They analyze information, assess risk, and consider various factors to make informed decisions that drive the organization forward. Next, they also develop and implement decision-making frameworks and processes to ensure consistency, efficiency, and transparency in decision-making across the organization. Also, they assess and manage risks associated with the decision-making processes. These involve identifying potential risks, evaluating their potential impact, and developing strategies to mitigate or address them effectively. Next, they also collaborate with key stakeholders, executives, and teams to gather input, seek consensus, and ensure effective communication throughout the decision-making process. They also establish mechanisms to monitor the outcomes of decisions and evaluate their effectiveness. This involves tracking key performance indicators, conducting post-decision reviews, and making necessary adjustment or improvement based on feedback and result. Next, they also promote a culture of continuous improvement within the organization. Last but not least, they also ensure that decision-making processes adhere to ethical standards and guidelines, and they assess the ethical implication of decision and promote responsible decision-making practices that consider of the interests of stakeholders and the broader society.
Now, let us move on to the next question. What is required us to identify the reportable and non-reportable segment of an entity? It is important to test for the qualitative threshold test. We will test the 10% threshold and 75% of the total external revenue. Let's start with the 10% threshold test. An entity is required to disclose information about a segment separately if it meets any of the following qualitative thresholds. Firstly, to test whether the revenue, which consists of external and internal, is greater or equal to 10% of the combined revenue of all operating segments. Secondly, to test whether the profit or loss is greater or equal to 10% profit or loss of the profit or loss making wherever is greater in absolute amount. Thirdly, to test whether the asset is greater or equal to 10% of the combined asset of all operating segments. They must meet the requirement of 10%, and if they don't, they will combine and disclose all other segments in the segmental report. Since the IH Healthcare use revenue basis, the 10% test will be evaluated based on the total revenue. Based on segmental report prepared by the IH Healthcare, the calculations show using 10% result has found that there are 4 reportable segments. It consists of Singapore 26.90%, Malaysia 60.65%, India 20.21%, and Turkey and Europe 22.95%. Meanwhile, the other reportable segment consists of China 5.22% and other 8.7%.
For the 75% threshold test, we can take from the total revenue from each country, which is Singapore, Malaysia, India, Turkey and Europe, divide by the total external revenue times 100%. And we can get 94.33%. So we can conclude that operating segments are only required to be reportable if they exceed quantitative threshold, as 94.33% is more than 75%. Thus, the existence of reportable segments such as Singapore, Malaysia, India, Turkey and Europe will remain reportable, and there is no need to identify additional reportable segments.
As the conclusion, we can see that segmental reporting has both advantages and disadvantages. For advantages, this will give investors and shareholders a clear and transparent view of company's operation. It is one of the main benefits since it helps in the process of decision making. The IHH Healthcare company's revenue report creates a better management of revenue sources and the performance of each segment, preventing misunderstanding or error in calculation and auditing. Meanwhile, some of the disadvantages of segmental reporting are increased complexity, cost money and time, and increased risk of manipulation. These disadvantages may give a negative impact to the company both financially and socially. However, despite the issues stated above, segmental reporting remains an important tool for companies to communicate their performance and for investors to make informed investment decisions.
Now we move to the interim reporting. For the interim reporting, there are two bases of preparation, which is integral method and discrete method. For integral method, interim report is a fraction of the annual report, which is annual values multiplied by the fraction of the reporting period. And for the discrete method, interim period is a separate period which reports are prepared on a periodic basis. According to the MFRS 134, an interim report should be prepared using the same method as the annual financial statements of the entity and should include information of the operations of the company's type and timing. The report should also include such significant events and transactions that have happened during the interim report or after the end of the previous annual reporting period should be included in the interim report. In conclusion, the objective of preparing the interim report based on MFRS 134 is to provide users of the financial statements current and relevant financial information to support their decision-making on the company's financial status and performance.
For two accounting policies, IHH Healthcare Berhad has prepared the interim report based on MFRS 101 and MFRS 108. For MFRS 101, presentations of financial statement, disclosure of accounting policies. An entity shall disclose in the summary of significant accounting policies the measurement basis used in preparing the financial statement and the other accounting policies used in relevant to an understanding of the financial statements. Therefore, sources of estimation uncertainty. An entity shall disclose information about the assumption it makes about the future and other major sources of estimation uncertainty at the end of the reporting period that have a significant risk of resulting in an immaterial adjustment to the carrying amount of assets and liabilities within the next financial year. In respect of those assets and liabilities, the note shall include details of their nature and their carrying amount as at the end of reporting period.
Next, MFRS 108. Accounting policies, changes in accounting estimates and error. MFRS 108 defined accounting policies as specific principles, bases, conventions, rules and practices applied by an entity in preparing and presenting financial statement. MFRS 108 defined a change in accounting estimate is an adjustment of carrying amount of an asset or liabilities or the amount of the periodic consumption of an asset that result from the assessment of the present status of and expected future benefits. Changes in accounting estimates result from new information or new developments and accordingly are not corrections of error. Thank you.
Now the types of interim report. IHH Healthcare apply condensed set of financial statement in preparing their interim financial report rather than complete set of financial statement. The condensed set of financial statement consists of consolidated statement of financial position, consolidated statement of profit or loss and other comprehensive income, consolidated statement of changes in equity, consolidated statement of cash flows, and selected explanatory notes.
Next, we made an explanation on the period for the current and comparative of each statement prepared by the IHH Healthcare. An accounting period will end of 31st December 2022 each year. The period for the current and comparative of each statement prepared by the company according to MRF 134 will be measured at 1st October 2022 to 31st December 2022. This is equivalent to the fourth quarter in 2022. The first statement is statement of financial position. For the current interim period is 12 months starting from 1st January to 31st December 2022 and its comparative end of the year immediately preceding financial year is 12 months starting from 1st January until 31st December 2021. Meanwhile, for the statement of profit or loss and other comprehensive income, the current interim period is 3 months starting from 1st October to 31st December 2022. The comparative for 3 months, and the period will be from 1st October to 31st December 2031. This is taken from the presentation of the quarterly financial statement ended on 31st December 2021, which is 3 months report. Meanwhile, the cumulative for the statement of profit or loss for the current interim period is 12 months starting from 1st January to 31st December 2022. Lastly, cooperative statement of profit or loss. The immediately preceding financial year for the year to date is 12 months starting from 1st January to 31st December 2021. The 12 months ending is calculated in according to the beginning of the financial year date to where the quarterly interim report ended. Next, with the statement of cash flow, where the current interim report is from 1st January to 31st December 2022 in according to 12 month ending. The comparative will start from 1st January to 31st December 2021. The current interim report and the comparative for the statement of changes in equity is the same as a statement of cash flow because both are calculated based on cumulative period.
There are two adjustments made by the company, which is impairment loss, and also the other one is trade and other receivable. So for the adjustment one, which is impairment loss, we all know that property, plant and equipment as at 31st December 2022 is 11,882,760,000. So for the situation 1, on 31st December 2022, one of an IHH healthcare equipment had been partially damaged and need to be tested to the impairment test. The equipment already been purchased on 1st January 2020 with a useful life of 10 years for 10,500,000. As at 1st December 2022, the equipment's fair value less cost to sell was 8,250,000 and value in use is 7,550,000. The net realizable value is the highest between fair value less cost to sell and value in use. So we all know that the fair value less cost to sell is the highest than the value in use. So to search for the impairment loss, which is cost of equipment minus with net realizable value, we can get 2,250,000. So here I provide with the before adjustment and also after adjustment. Next, adjustment 2, which is trade and other receivable. Trade and other receivable as at 31st December 2022 is 196,563,000. So for the situation 2, on 1st December 2022, it was estimated that the amount of 27,550,000 cannot be collected by the end of 31st December 2022. So it means that the net amount of trade and other receivables is 169,013,000. So I provide the statement of financial position as well as at 31st December 2022. So we can see that the property, plant and equipment before adjustment we get 11,882,716,000 and for the after adjustment is 11,818,510,000. So for the trade and other receivable, before adjustment is 196,563,000 and for the after adjustment is 169,013,000.